Question 8. Is ARKB suitable for all investors? Due to the inherent risks involved, ARKB is not suitable for all investors. The following factors should be carefully considered before investing in ARKB. 1. Risk tolerance. ARKB's primary underlying asset, Bitcoin, is highly volatile and susceptible to significant price fluctuations. Investors with a low risk tolerance, or those uncomfortable with the potential for substantial losses, should avoid ARKB. 2. Investment time horizon. ARKB is best suited for investors with a long-term investment horizon. Bitcoin's historical price movements exhibit significant volatility, and short-term fluctuations can be substantial. Investors with short-term investment horizons may be exposed to significant losses due to unforeseen price swings. 3. Financial situation. ARKB is an aggressive investment and should only be considered with disposable income. Investors should not invest funds needed for essential expenses, retirement goals, or other critical financial needs. 4. Investment knowledge. Understanding the unique characteristics and potential risks associated with Bitcoin and the broader cryptocurrency landscape is crucial before investing in ARKB. Investors should conduct thorough research, understand the underlying technology, and be comfortable with the inherent uncertainties associated with emerging markets. 5. Diversification. ARKB should be considered a complementary investment within a well-diversified portfolio. Its inclusion should be carefully considered within an appropriate risk framework, ensuring it aligns with overall investment objectives and risk tolerance. 6. Tax implications. Investors should be aware of the potential tax implications associated with investing in ARKB. Consulting with a qualified tax advisor is essential to understand the potential tax consequences before making an investment decision. Question 9. What are the alternatives to ARKB? Several alternative investment options offer varying levels of exposure to Bitcoin and the broader digital asset space. Here are some key options to consider. 1. Directly purchasing Bitcoin. Investors can acquire Bitcoin directly through cryptocurrency exchanges. This approach offers greater control over the investment and potentially lower fees compared to ARKB. However, it also comes with increased responsibility for self-custody and securing private keys, which can involve technological complexities and higher security risks. Additionally, investors may face wider bid-ask spreads depending on the chosen exchange, potentially impacting entry and exit points. 2. Bitcoin futures. Trading Bitcoin futures contracts on regulated exchanges provides exposure to the price movements of Bitcoin without the need for physical custody. This option can be beneficial for speculating on Bitcoin's price movements or potentially hedging against other investments. However, futures contracts involve leverage, which can amplify both gains and losses, making them risky instruments for inexperienced investors. Moreover, managing futures contracts requires understanding their unique characteristics and associated risks. 3. Other Bitcoin ETFs. Several other Bitcoin ETFs are available in the market, each with its own expense ratio, investment approach, and potential risks and benefits. These alternatives may differ in terms of their tracking index, holdings, and underlying investment strategies. Investors should carefully compare features, fees, and risks before choosing an ETF that best aligns with their investment objectives. 4. Blockchain technology ETFs. These ETFs offer exposure to a broader basket of companies involved in the development, adoption, and utilization of blockchain technology. By investing in these ETFs, investors can gain exposure to the potential growth of the blockchain ecosystem without directly holding Bitcoin or other cryptocurrencies. However, these ETFs may be less volatile than ARKB, but also offer potentially lower returns due to their diversified holdings. 5. Grayscale Bitcoin Trust, GBTC. This is a closed-end fund that invests in physically settled Bitcoin. While it offers a regulated platform for investors seeking exposure to Bitcoin, GBTC typically trades at a premium to its net asset value, NAV, meaning investors may pay more than the underlying value of the Bitcoin held by the trust. Additionally, GBTC has a limited creation and redemption process that can impact its liquidity compared to exchange-traded funds like ARKB. Question 10. How does ARKB's liquidity compare to directly investing in Bitcoin? ARKB offers significantly superior liquidity compared to directly investing in Bitcoin. This difference stems from the underlying structure and trading mechanisms of each option. 1. ARKB Exchange-traded fund. ARKB trades on a regulated exchange, similar to stocks and other traditional investments. This allows investors to buy and sell shares throughout the trading day at the prevailing market price. Order book. The exchange maintains an order book that matches buy and sell orders, facilitating efficient transactions and ensuring continuous liquidity during trading hours. No minimum investment. Investors can typically purchase fractional shares of ARKB, allowing them to invest with smaller amounts compared to purchasing a whole Bitcoin. 2. Directly investing in Bitcoin. Cryptocurrency exchanges. Buying and selling Bitcoin directly occurs through cryptocurrency exchanges. While numerous exchanges exist, they operate outside of traditional financial regulations and may have varying liquidity levels depending on the platform and market conditions. Order matching. Orders on cryptocurrency exchanges are matched based on availability and price. However, liquidity can be lower compared to regulated exchanges, especially for large transactions. Minimum purchase requirements. Some cryptocurrency exchanges may impose minimum purchase requirements for Bitcoin, potentially limiting accessibility for investors with smaller investment amounts. Overall, ARKB offers a more convenient and liquid method for gaining exposure to Bitcoin. Investors benefit from the familiarity of exchange-traded funds, readily accessible trading opportunities throughout the day, and the potential to invest with smaller amounts compared to directly acquiring Bitcoin on cryptocurrency exchanges. Question 11. Can ARKB be used in investment strategies like portfolio diversification or hedging? Yes, ARKB can potentially be used in various investment strategies, including portfolio diversification and hedging. Here's how. Portfolio diversification. Low correlation. Bitcoin exhibits a low correlation with traditional asset classes like stocks and bonds. This means its price movements are often not closely tied to the performance of other, more traditional investments. Risk reduction. By including ARKB in a well-diversified portfolio, investors can potentially reduce overall portfolio risk. When traditional assets decline, Bitcoin may remain unaffected or even increase in value, mitigating potential losses. Important considerations. It's crucial to remember that Bitcoin remains a highly volatile asset. While it offers diversification benefits, its inclusion in a portfolio should be carefully evaluated within an appropriate risk framework. Hedging. Inflation hedge. Some investors consider Bitcoin a potential hedge against inflation due to its limited supply. If concerns around rising inflation exist, including ARKB in a portfolio could offer some protection against the decline in purchasing power of traditional currencies. Downside market hedge. During significant market downturns, investors may use ARKB as a short-term hedge to reduce overall portfolio exposure to traditional assets. However, it is crucial to recognize the extreme volatility of Bitcoin and its potential to amplify losses, particularly in the short term. Important considerations. High risk. Using ARKB for hedging purposes carries significant risks due to the inherent volatility of Bitcoin. Its price movements can be unpredictable, and it may not always act as an effective hedge during market downturns. Evolving market. The cryptocurrency market is still developing, and its long-term correlations with traditional asset classes and its true potential as a hedge against inflation remain uncertain. Strategic investment. Incorporating ARKB into an investment strategy for diversification or hedging should be approached cautiously and after thorough research and a clear understanding of the associated risks. Question 12. How does ARKB compare to other thematic or sector-specific ETFs focused on blockchain technology or digital assets? ARKB presents a unique offering compared to other thematic or sector-specific ETFs focused on blockchain technology or digital assets. Here's a breakdown of the key differences. 1. Investment focus. ARKB invests solely in physically settled Bitcoin, offering direct exposure to the price performance of this specific cryptocurrency. Thematic sector ETFs often invest in a diversified basket of companies involved in various segments of the blockchain ecosystem. These may include companies developing blockchain technology, providing blockchain infrastructure, or operating within specific blockchain applications like decentralized finance, DeFi, or non-fungible tokens, NFTs. 2. Risk profile. ARKB carries the inherent risks associated with Bitcoin, including high volatility, regulatory uncertainties, security vulnerabilities, and potential market manipulation. Thematic sector ETFs generally offer a lower risk profile compared to ARKB due to diversification across multiple companies within the broader blockchain ecosystem. However, these ETFs still carry risks associated with individual companies, the overall technology sector, and potential regulatory developments. 3. Performance potential. ARKB potentially offers high returns due to Bitcoin's historical price appreciation, but also carries the risk of significant losses due to its volatility. Thematic sector ETFs typically aim for moderate long-term growth, potentially offering lower potential returns than ARKB, but with potentially lower volatility and reduced risk of catastrophic losses. 4. Investment objective. ARKB primarily aims to track the price performance of Bitcoin. Thematic sector ETFs have broader objectives, aiming to capture the growth potential of the entire blockchain ecosystem by investing in various companies and technologies within the space. Choosing between ARKB and thematic sector ETFs depends on your individual investment goals and risk tolerance. Investors seeking direct exposure to Bitcoin and potentially high returns may consider ARKB, but are comfortable with the associated high volatility and risks. Investors seeking broader exposure to the broader blockchain ecosystem, with potentially lower risk and more moderate return potential, may favor thematic sector ETFs. Question 13. How does ARKB's performance compare to actively managed Bitcoin investment strategies? ARKB and actively managed Bitcoin investment strategies differ in their approach to achieving exposure to Bitcoin, leading to potential variations in performance. ARKB passive management tracks the price performance of Bitcoin by holding physically settled Bitcoin and passively rebalancing to maintain alignment with the tracking index. Performance. ARKB's performance is directly tied to the price movements of Bitcoin, minus its expense ratio. This means it aims to mirror Bitcoin's returns, capturing both potential gains and losses. Transparency. ARKB's holdings and performance are readily available and transparent due to its exchange-traded nature. Actively managed Bitcoin investment strategies. Active management employ various strategies like trading Bitcoin futures, utilizing leverage, or selecting specific Bitcoin-related companies to attempt to outperform the underlying asset. Performance. The potential returns of actively managed strategies can vary significantly depending on the specific strategies employed and the skill of the portfolio manager. They may outperform or underperform Bitcoin's price movements. Limited transparency. The specific holdings and investment strategies of actively managed funds may not be publicly available, making it challenging to fully assess their potential risks and returns. Here's a summary of the key points to consider. ARKB offers a transparent and cost-effective way to track the price performance of Bitcoin. Actively managed strategies offer the potential for higher returns, but also carry greater risk and potentially higher fees compared to ARKB. Choosing between ARKB and actively managed strategies depends on your investment goals and risk tolerance. Investors seeking a low-cost, transparent, and passive way to gain exposure to Bitcoin may favor ARKB. Investors comfortable with potentially higher risks and aiming for potentially higher returns may consider actively managed strategies, but should carefully assess the specific strategies employed and the associated fees. Alright, folks, that's all the time we have for ARKB today. We covered a lot of ground, from its features and benefits to the potential risks and alternatives. Remember, ARKB offers a regulated and convenient way to gain exposure to Bitcoin, but it comes with inherent volatility and requires careful consideration of your risk tolerance and investment goals. Before making any investment decisions, do your own research, understand the risks involved, and consult with a qualified financial advisor to see if ARKB aligns with your financial objectives. Thanks for joining us on Chat ETF today. If you enjoyed this video, don't forget to like and subscribe for more in-depth ETF discussions. We'll see you on the next one.